in exchange for some asset, but in the case of the lease, I'm treating it as an executory contract, and I'm not recognizing a liability at the present value. Why am I not discounting the lease liability? If anyone ever asked that question, why am I not treating my normal operating lease as an obligation, like any other obligation, because I have to pay cash? Anyway, let's talk about IFRS 16. So David Tweedy is the chairman of the ISB. The ISB, he was the ex-chairman. He was the ex-chairman of the ISB. His famous saying is, one of my great ambitions before I die is to fly in an aircraft that is on the airline's balance sheet. I hope he lives till 2019, 31st March, because he will see it. And look, I want him to see that, because that will make sense. You know, if you analyze an airline's balance sheet, say an airline, one of these Far Eastern airlines that has no aircraft on the balance sheet, the return on assets doesn't make sense. I'll tell you what's the problem. What is the revenue from an airline earned from? Ticket sales, right? If you got no aircraft, you're taking that revenue from ticket sales and you're dividing it by furniture and equipment assets. And you say, wow, my furniture is doing really well. Let's buy more furniture. You understand that you'll make the wrong decision. So look, I think my view is this standard is going to change things. This is an ambition. So David Tweedy's objective is going to be met. But the current ISB chairman's objective is more clear. He says listed companies are estimated to have $3.3 trillion. I didn't convert that to rupees, Amir Saab. I don't know how. But $1 trillion is 9 zeros. Of lease commitments, over 85% of them do not appear on the balance sheet. And this is the underlying philosophy. Leasing is a financing transaction, but somehow we have managed to escape booking a liability for this financing transaction. This is the reality. It's a financing transaction. It's hidden debt. Debt is hidden. Let's go on. Why is this standard important? I'll tell you why it's important. It's industry agnostic. All companies, or most companies, lease assets. Whether it's a bank, whether it's a telco, whether it's any company, in some form or the other, leases assets. Therefore, you will be impacted. Whether you have a 2-year lease, whether it's for a core asset or whether it's for a non-core asset. So it's not just the aircraft of the airline. I'm working with an airline in the UAE. It's not Emirates. So I'm working with an airline in the UAE, and we are saying, look, that's just one thing, the aircraft. What about the other kiosks you have in the malls? What about the forklifts? What about the airport lounges that you have in Heathrow, Berlin? Those are all leases that will have to be brought on. The aircraft leases are easy. It's the everything else that becomes the problem. So most companies lease assets, which means most companies will be impacted. If you want me, some companies tell me, look, how do I avoid applying IFRS 16? I'll tell you. Close your business on 31st December 2018. Or don't have any lease arrangements on 1st January 2019. You can avoid it. So most companies, so this, what I'm saying here, the impact is pervasive. It's pervasive. It's going to affect everybody. Under IFRS 16, what is going to be the outcome? Lessees are going to bring leases on balance sheet. Whether it's a 1-year, 2-year, 3-year, 4-year, 5-year, you're going to have a liability and you're going to have an asset. So finance lease accounting for everybody, for every lease. There are minor exemptions, we'll get to those, but this is the issue. Lessees will bring leases onto the balance sheet, and this is an issue. Nobody's spoken about the lessor yet. Are you wondering what the lessor does? Can I tell you what the lessor does? No change for the lessor. The lessor will still decide whether a lease is a finance lease or an operating lease. And if the lessor concludes it's an operating lease, he'll have the asset on his balance sheet, and the lessee will have a right of use asset on its balance sheet, and hallelujah, the economy of the country or the GDP of the country has increased because we've double counted an asset. Have we double counted an asset? Do you think we're double counting? No, I don't. We are not actually double counting. We're recognizing an asset that was there all along that was never recognized. The Emirates aircraft was always there. I'm not double counting it. It was there. The leased assets on your balance sheet are there. They are assets. Why are they assets? Because they meet the definition of an asset. What's the definition of an asset? It's a resource controlled by the party as a result of a past event from which future economic benefits are expected to flow. You have it. The property that you are leasing is yours. You can prevent others from using it. It's an asset. But we currently don't account for it as an asset. So it's not really a double count. It's actually an acknowledgement that the asset exists. So look, but the main focus of the standard is on the lessee. Get the lessee accounting right. Now, in the good old IAS 17 standard, the big debate with clients was, is this a finance lease or operating lease? Under IFRS 16, you know what the new debate is going to be? No. All leases are finance lease. But sir, perhaps this isn't a lease. And this is a valid argument. I've been hearing this argument from clients, and it is an extremely valid argument. And I'll tell you why. The lease definition has changed. And there will be a lot of leases under IFRS 16 or leases under IAS 17 that would not qualify for the lease definition under IFRS 16. They've changed it. They've improved it. What the little nonsense they had in IFRIC 4 paragraph 9, they have fixed it up. And now you've got a better lease definition. So some leases under the old standard won't qualify. But you know what? I still think when you're looking at a leasing problem, now going forward, your first question won't be finance lease or operating lease for a lessee, because all leases will be finance leases. Your assessment and your analysis will be whether it is a lease. Many ratios will be changed. Your stakeholders, investors need to know about the impact now. It will affect KPIs, it affects earnings before interest and tax. In fact, a few weeks ago, one of the CFOs, his key KPI is to manage finance costs. And guess what? By this standard, the finance cost shoots up massively. And he's out of his KPI. Maybe he should change his KPI. I didn't suggest that. But he's extremely worried or concerned about the standard. So, this is the story. Let's talk. What I'm going to tell you now is I'm going to be going through these things. I will be giving you, first and foremost, a high-level overview. I will show you the debits. I will show you the credits. And I want to show you how the balance sheet looks. And then within the time frame, I will try and go through this definition. If I cover that, I'm happy for the day. All right, for leases. And this is the awareness I want to create for you. So, let's just talk about the project. Let me give you a little bit of insight on the project. Okay, when the project came out, it had 4 objectives. The 4 objectives of the project, it was a joint project between IFRS and US GAAP, or ISB and FASB. The first objective was to get lessees to recognize leases on balance sheet. Has that been achieved? Absolutely yes, under both IFRS and US GAAP. So you can't say, hey, I'd like to use US GAAP to avoid this. The second objective was to eliminate arbitrary accounting distinctions for transactions that were similar. They didn't want you to play around and mess around with the finance lease, operating lease definitions. That hasn't been achieved. It hasn't been achieved. Why it hasn't been achieved? Because for the lessor, you still got to decide if a lease is a finance lease or operating lease. If they wanted to reduce complexity in lease accounting, it hasn't been achieved because the lease accounting has remained complicated. They wanted to develop converged lease accounting standards. IFRS and US GAAP is different. So they haven't achieved any of the objectives. So, usually, if you only get 1 out of 4, you fail, right?